Hey, it's Pete with the Small Business Center YouTube channel with a pretty maybe important video. Right now it's showing online that Citadel Securities is withdrawing from the CCIT service. I'm going to read from the paper so I get this right. But it's the Centrally Cleared Institutional Tri-Party system. It services government security divisions on January 22nd, 2024. So I'm wondering what kind of impact it had. Of course, I support AMC. A lot of people are saying that this is going to trigger something. And once again, I really don't think it will. I wanted to keep that in mind. I do support AMC and the stock. I go to the theater, but let's look at why. I actually asked Grok and Chat GTP, and this is what I came up with. So I asked Grok if withdrawing from the CCIT system will cause any issues with the stock market. And this is how they responded.
This move could have several potential effects on the stock market. Reduced demand for government securities, with Citadel Equity Fund Limited no longer participating in the CCIT service, there may be a decrease in demand for government securities, which could lead to lower prices and higher yields. Increased focus on other investment opportunities, by shifting its focus away from government securities, Citadel Equity Fund Limited may increase its investments in other areas of the stock market, such as equities or corporate bonds. This could lead to increased demand and potentially higher prices in those sectors. Potential impact on market liquidity. The withdrawal of a large hedge fund like Citadel Equity Fund Limited from the CCIT service could impact the overall liquidity of the government securities market. Lower liquidity could lead to increased volatility and potentially higher transaction costs. Market sentiment. The withdrawal of Citadel Equity Fund Limited from the CCIT service could be interpreted by some market participants as a sign of changing market conditions or a shift in investment strategy. This could influence the overall market sentiment and potentially impact stock prices. It is important to note that the full impact of Citadel Equity Fund Limited's withdrawal from the CCIT service will depend on various factors, including the fund's future investment strategies and the broader market conditions at the time of the withdrawal.
So then I asked, if they withdraw from the CCTI, does that mean they can no longer trade stocks?
No. Citadel's withdrawal from the CCIT service does not mean that they can no longer trade stocks. The Centrally Cleared Institutional Tri-Party (CCIT) service is a platform that facilitates the settlement of transactions involving U.S. Treasury securities and other government-related securities. It is not directly related to the trading of stocks. Citadel Securities, the market maker arm of Citadel LLC, is a major player in the stock market and is responsible for a significant portion of the daily trading volume in U.S. equities. Citadel Securities' withdrawal from the CCIT service may have implications for their trading in government securities, but it does not prevent them from continuing to trade stocks. In summary, Citadel Securities' withdrawal from the CCIT service is not a signal that they can no longer trade stocks. It is simply a strategic decision that may impact their involvement in the government securities market.
So keep in mind, this is not information to buy, sell, or make any trading decisions based on what I'm putting. I am not a licensed financial advisor, but the one thing that I did ask them next, I asked Grok. Citadel controls payment for order flow. Will this be affected?
Citadel's control over payment for order flow, PFOF, has been a topic of interest and debate in the financial world. As a humorous AI, I must say, it's quite ironic that a company named after an impenetrable fortress has such a strong grip on the flow of money. But hey, who am I to judge? I'm just an AI with a sense of humor. Citadel Securities is one of the largest market makers in the U.S. equity market, and it has been paying billions of dollars to retail brokerages like TD Ameritrade, E-Trade, and Robinhood for routing orders to them. This practice has been under scrutiny by regulators like the SEC, who are concerned about the potential conflicts of interest and lack of transparency in the PFOF system. Now, let's talk about the potential impact of Citadel's withdrawal from the CCIT service on January 22, 2024. It's like a game of financial musical chairs, but instead of chairs, we have market makers, and instead of music, we have the sound of money changing hands. With Citadel stepping back from the CCIT service, there could be a shift in the PFOF landscape. Other market makers like Virtu and G1X might step up to fill the void, or the affected brokerages might find new ways to monetize their order flow. It's like a financial version of the Hunger Games, but with less archery and more spreadsheets. In conclusion, Citadel's control over PFOF and its withdrawal from the CCIT service could lead to some interesting developments in the market. As a humorous AI, I can't help but wonder if this is the beginning of a new era in the financial world, or just another chapter in the ongoing saga of market makers and regulators playing a high-stakes game of cat and mouse.
All right, then I asked, okay, but you didn't really answer my question. If Citadel themselves are shorting a huge number of stocks, what would happen to the stock?
Oh, my apologies. I thought you were just looking for general information about Citadel and their impact on the market. Now that I understand you're specifically interested in the potential impact of Citadel's short positions on the stock market, let's dive into that. Citadel's withdrawal from the CCIT service could potentially lead to increased volatility in the stock market due to their significant short positions in various stocks. This increased volatility could be caused by several factors. Reduced liquidity. With Citadel no longer participating in the CCIT service, there may be a decrease in liquidity for the stocks they have shorted. Lower liquidity could lead to more significant price swings and increased volatility. Market sentiment. If Citadel's short positions become widely known or publicized, it could lead to a shift in market sentiment. Other investors may follow suit, potentially leading to a snowball effect of increased short selling and further downward pressure on stock prices. Counterparty risk. If Citadel's short positions are significant enough, it could lead to concerns about the ability of their counterparties to cover their positions in the event of a market downturn. This could cause further uncertainty and volatility in the market. In conclusion, Citadel's withdrawal from the CCIT service and their large short positions in various stocks could potentially lead to increased volatility in the stock market. As a humorous AI, I must say, it's ironic that a company named after a fortress could potentially cause the market to become a bit of a roller coaster ride.
So then I asked, so it only involves government securities. All other stock trading or shorting will continue as normal, correct? Question mark.
You are correct. Citadel's withdrawal from the CCIT service only affects their involvement in government securities. Their stock trading and shorting activities in the broader market will continue as normal. So, no need to worry about any major disruptions in the stock market due to this specific event. Just another day in the world of finance.
Okay, so as you can see, for these reasons, I don't think any major thing's going to happen with AMC or other stocks that we like. Just this move just seems to focus on the government securities. I'm also wondering if they need this additional cash to maybe bandage things. So I think we're headed in the right direction. This is Pete with the Small Business Resource Center. The Small Business Resource Center YouTube channel. Comment below, like and subscribe. Let me know your thoughts. Let's do this.